right, so you wanted to dive into alternative assets and wealth preservation. Let's do it. We're tackling a question that I think a lot of people are thinking about, which is how to grow your money when a regular savings account just doesn't cut it, especially with inflation.
And you brought us a really interesting article to dig into. This piece from Crypto Asset News definitely doesn't hold back. Are banks stealing your wealth? That's quite a statement.
Yeah, I mean, stealing might be a little extreme, right? But it does make you stop and think, what if just having money in the bank isn't the best strategy? Especially with inflation being what it is these days.
It's a valid concern, and the article knows how to grab your attention. But the question underneath, that's what we're here to unpack. How do different assets perform over time, especially when the economy throws us a curveball?
It reminds me of those scenes in heist movies. You know, what are the robbers after? It's never just piles of cash.
It's the gold, the silver, diamonds locked away in some vault.
Exactly. And the article uses that to bring up this idea of intrinsic value, which makes a lot of sense when you think about it. Like physical assets, things you can actually hold, they feel more real in a crisis than a digital stock, you know.
There's a weight to them, literally. And historically, gold has been the go-to hedge against inflation. The article mentions that in 1969, an ounce of gold was about $40. By 2000, it had jumped to $279.
And now, in 2024, it's something like $1,900 an ounce.
It really shows you the power of tangible assets holding their value, even increasing, while currencies can be all over the place.
It's like that example in the article about inheriting old coins. What seems like a curiosity could actually be quite valuable.
Absolutely. Speaking of things that hold value, the article then moves on to real estate, which is a whole other world.
Yeah, and a lot of people are curious about real estate, becoming a landlord, buying property. It's a big decision. This article highlights the potential for long-term returns, something like an average of 10% over the past 20 years. That caught my eye.
And it's a bit higher than the S&P 500 stock index over the same period. But, and this is important, the article doesn't sugarcoat it. Real estate has its risks. It can be volatile.
No kidding. Just look at the 2007 housing crisis.
Yeah.
A stark reminder that even assets we think of as safe can take a hit.
It all comes back to diversification, right? No single investment is foolproof.
True, true. Okay, so from real estate, the article goes somewhere I definitely didn't expect collectibles.
Yeah.
Were you surprised to see this in an article about wealth preservation?
I'll admit, it seemed a bit out of left field, but some of the numbers they cite are pretty wild. Like those Hermes bags back in the 1950s, they cost around $900.
And now?
Today, a standard one can easily cost $10,000. And if you're talking about limited editions, you're looking at prices upwards of $260,000.
Seriously, that's over 1,000% increase.
Okay, I'm listening. What's the logic here?
Scarcity.
Yeah.
The fewer there are of something, the more people are willing to pay. And it's not just designer handbags. Think about those vintage Star Wars action figures you loved as a kid.
Wait, are you serious? Like the ones I actually had?
Those very ones. Held onto them since the 90s.
Yeah.
Back then, they were maybe $5, $10 a piece. Now, those same figures, in mint condition, they're selling for thousands, sometimes tens of thousands.
Get out of here, no way. It's true. They even mention a first edition Amazing Spider-Man comic from 1962 that recently sold for $1.1 million.
Okay, that is mind-blowing. But let's be real. Not everyone can drop $1 million on a comic book. What about something a little more attainable for us regular folks?
That's where the article pivots to industrial commodities. We're talking about the raw materials that underpin the global economy. Metals, concrete, things like that.
The stuff that's not as exciting as a rare comic book, but keeps the world running.
Exactly. Construction, manufacturing, technology, it all depends on these materials. And here's something interesting. You can actually invest in this sector.
Really? I had no idea.
It's true. The article talks about mutual funds and ETFs, specifically the Vanguard Materials Index Fund and the Industrial Select Sector SPDR Fund, which track the performance of companies involved in producing these raw materials.
So for someone who's interested in alternative assets, but not ready to bet the farm on a vintage action figure, this could be an option.
It could be, but as always, it's crucial to do your research and understand the risks involved. And speaking of farms...
Ah, yes. The article's take on becoming a modern-day farmer. What did you make of that whole section? It felt very Little House on the Prairie.
It was a bit romanticized, wasn't it? Owning your land, growing your own food, it's a compelling image, especially in uncertain times.
It definitely taps into that desire for tangible assets, that off-the-grid fantasy that's become so popular. But is farming really a path to building wealth, or is that a bit of a simplification?
Well, I think it's important to remember that farming at its core is a business. It takes a lot of capital to get started, not to mention hard work, and a fair amount of luck.
So maybe not the get-rich-quick scheme it's sometimes made out to be.
Exactly. Which brings us to an interesting turn in the article. It's like they did a complete 180 from homesteading and landed right back on Wall Street talking about U.S. Treasury bonds.
It was a bit jarring, I have to say. What was that all about?
It did feel a bit out of place after all that talk about tangible assets and self-sufficiency, but it does highlight something important. Need for a balanced portfolio.
Don't put all your eggs in one basket, even if that basket is full of gold bars and vintage Star Wars figures.
Precisely. It's about understanding how different asset classes can work together in a well-rounded approach to wealth building. And bonds, especially U.S. Treasury bonds, are generally considered a safe haven asset.
They don't have the same potential for those massive returns like stocks or real estate, though, do they?
That's true. They usually offer more modest returns, but are often seen as less volatile, and they can provide a steady stream of income, which is appealing to some investors.
Right. And then you have those safe haven currencies, like the Swiss franc, that tend to hold their value when other currencies are all over the place.
Exactly. The article uses the example of the 2008 financial crisis, and even more recently, the situation in Russia, where investors flocked to the Swiss franc as a safe haven.
So it seems like we've come full circle. We started with moving away from traditional banking and ended up back in the world of currencies, even if they're a bit more specialized.
It's interesting how that happens. This article took us on a whirlwind tour of different asset classes, each with its own quirks, potential benefits, and risks.
And we're just getting started. When we come back in part 2, we're going to dive even deeper into these concepts and talk about what they could actually mean for you, our listener, and your own financial goals.
It really makes you think about how we see wealth and security these days, you know?
Totally. I mean, we've already talked about gold and those crazy expensive Hermes bags, but you've hit on something important. This isn't just about some spreadsheet. It's about how we feel in this world, especially when things are uncertain.
Right. And that takes us back to the start of the article. Remember that in-your-face question about banks.
Are banks stealing your wealth? Yeah, I remember.
It plays on a real fear that maybe playing it safe with money isn't enough anymore.
And that's where tangible assets come in. It's like there's something so basic about holding something valuable. Like it's real. It lasts. Especially when so much now is digital.
I get it. The article talks about intrinsic value, and that idea really clicks with people. You hold a gold coin, you feel it, you sense its history.
It's like this is going to be worth something no matter what the stock market does.
Exactly. It's enduring worth. And that feeling of holding on to something tangible, it's powerful.
Totally. But we were saying even with these real assets, you have to understand what makes them valuable, right?
Right. Take those Hermes bags. Yeah, they're well made, but it's the limited numbers driving up the price.
Scarcity.
Exactly. Basic economics, but it applies to everything. Luxury items, essential resources, you name it. The rarer it is, the more people want it.
Hence the $1 Million Spider-Man comic.
Yeah.
And speaking of scarcity, what about land? The article seemed really high on real estate as an investment.
Well, it makes sense, right? There's only so much land. As populations grow, it becomes more and more valuable.
So it's a pretty safe bet in the long run.
Historically, yeah, it's been seen as relatively stable. But you can't forget about those market cycles and economic crashes.
Oh, right. Like the 2007 housing bubble bursting. Nobody saw that coming. Makes you think twice.
Exactly. It reminds us, even when we think something is a safe asset, we need to spread out our investments.
Diversification is key. Which, maybe that's a good transition to talk about those industrial commodities.
Yeah.
I gotta say, that part of the article caught me off guard.
Yeah, it's not as exciting as gold or vintage items, I'll admit.
But it is important.
Absolutely. It's easy to overlook because it's not glamorous. But industrial commodities are holding up the global economy. The steel in buildings, the copper in electronics.
It's like investing in the stuff that makes civilization work.
Exactly. And it might not be as cool as a rare comic, but it can be a good way to be a part of global growth and maybe even a hedge against inflation, especially in uncertain times.
Okay, I see that. But we got to talk about the farming part. That whole section was different.
A little romanticized.
Yeah, like that whole back to the land thing.
I get the appeal, though, you know. Own your land, be self-sufficient, grow your food. It's a powerful image. But, like we said earlier, you got to be realistic. Farming is a business. It takes money, hard work, and some good luck.
So, probably not the way to get rich quick.
Yeah, that's pushing it. It's hard work, no doubt. But for some, it could be a good fit, maybe even a profitable investment in the long run.
Okay, so we talked about all these tangible things, but then the article makes this hard turn back to bonds and currencies. It's like we went from living off the land right back to Wall Street.
It was a jump, wasn't it?
I mean, we were talking about our banks stealing your wealth, and then suddenly we're talking about U.S. Treasury bonds.
Well, it's a reminder that those traditional investments still matter. Even with all this talk about alternatives, like we were saying before, it's about balance.
It's almost like they're saying, don't get too caught up in those alternative assets. Here are some familiar options.
Yeah, it's easy to get swept up in the excitement of something new. But a good portfolio, it needs that balance.
Yeah.
And bonds, especially U.S. Treasury bonds, they're usually seen as that safe haven.
Although in the article, they did mention those historically low returns we've seen lately.
Right, they brought up the 10-year Treasury note. Back in 2020, it was yielding something like, 0.73%? It reminds you that even with safe investments, you're weighing risk against potential reward.
Right, there's always a trade-off. And then, of course, you have those safe haven currencies, too.
Yeah, like the Swiss franc.
Yeah.
Seems to hold strong, even gain value when things get messy.
Makes you wonder if that's stashed in those heist movie vaults, too, right next to the gold.
Maybe. The article used some interesting examples like the 2008 crisis and then more recently what's happening in Russia, showed how those currencies become a sort of safe bet when other markets are freaking out.
So after all this talk about alternatives, diversifying, what's the big takeaway? It seems like the real message is bigger than just picking the right asset.
Absolutely. This whole deep dive has been a case for financial education.
Like really understanding what you're getting into.
Exactly. It's not about chasing the latest trend or putting all your faith in one thing. It's about doing your homework, knowing how it works, the good and the bad.
So the article, as interesting as it was, is just the first step.
It's a starting point. The exciting part is taking that curiosity and digging deeper yourself.
Exactly. We always say, don't just take our word for it. Go explore, figure out what makes sense for you. What would you say to someone who is feeling inspired by all this? Where should they even begin?
There are so many resources out there. Seriously, it's amazing. Books, articles, podcasts just like this one, online courses. It's finding what clicks for you.
And don't be afraid to ask questions. Talk to advisors. Join online communities. Be part of the conversation about money.
It's true. Knowledge is power, especially when you're talking about building a solid financial future.
I love that. I mean, that's what this has been all about. Not just these alternative assets, but giving you the tools to take control.
Take charge of your financial well-being. Exactly.
And that starts with being curious, right? So before we wrap up, we have a little challenge for you. What really resonated with you today? What are you curious about? Write those questions down. Make a list of things you want to learn more about. Consider it your own financial education game plan.
And remember, we're here with you every step of the way, cheering you on as you navigate this world and build a better future. Thanks for coming along on this deep dive with us.
Until next time, keep those questions coming and keep exploring.